You know what's crazy? I was sitting at my desk yesterday, watching the stock market fluctuate, and it hit me. Success isn't this mysterious, magical thing. It's a formula, a pattern that follows mathematical principles, just like everything else in our universe. Think about it. Behind every fortune, every thriving business, every financial breakthrough, there's a formula that can be understood, replicated, and optimized. I've been obsessed with this idea lately. Today, I want to share something that completely changed how I view success, especially in investing. I'm going to show you how to look at success through the lens of mathematics, specifically how it relates to the flow of cash in our economy and the stock market. Here's the thing. We live in a world defined by cash flow. Money is constantly moving, being earned, spent, invested, and transferred. This isn't just some philosophical idea. It's a mathematical reality that follows specific patterns. When I first started investing, I made a crucial mistake. I looked at stocks as just numbers on a screen, prices going up and down randomly, but that's not what they are at all. Each stock represents a position in a cash flow stream. Think about it like this. When you buy Apple stock, you're not just betting on a price increase, you're buying a stake in Apple's cash flow. You're positioning yourself in that river of money flowing through the company from consumers buying iPhones, subscriptions, and services. The most successful investors I know, they don't just pick stocks. They strategically position themselves within economic cash flows. Warren Buffett doesn't just buy companies, he buys positions in durable cash flow streams. He looks for businesses with economic moats, which is really just another way of saying positioned in a cash flow stream with barriers to entry. But here's where it gets fascinating. Cash flow doesn't exist in a vacuum. It follows universal laws, just like everything else in our world. When I analyze a stock now, I think about it in terms of fluid dynamics. Seriously, just like water flowing through a river system. Path of least resistance. Cash, like water, flows where it meets the least resistance. That's why money floods into high-growth sectors with few regulations and flows away from heavily taxed or regulated industries. Pressure systems. Just yesterday, I was watching how the Fed's interest rate decision created a pressure system that pushed cash from bonds to stocks within minutes. These pressure differentials create predictable cash movements. Turbulence and volatility. Market crashes and bubbles aren't random. They're turbulence in the cash flow system, often occurring at points where flows converge or diverge rapidly. I've lost money in the past by fighting against these natural laws. Now I try to work with them, positioning my investments to capture cash flow where it's already moving strongly. The stock market is literally just a real-time dashboard of cash flow expectations. That's it. When Amazon's stock price goes up, it's not magic. It's a collective calculation that Amazon's future cash flows will be larger than previously expected. When a stock crashes on an earnings report, it means the market is recalculating expected future cash flows downward. I've completely changed how I read stock charts now. I don't see just lines and patterns. I see cash flow expectations changing in real time. A breakout isn't just a technical pattern. It represents a sudden shift in how the market views future cash flows for that company. Think about how quarterly earnings reports move stocks. The report itself is just information about the company's cash flow, how much came in, how much went out, and what they expect for the future. The market reacts based on whether that cash flow is stronger or weaker than expected. Here's what makes investing so complex, though. Unlike water, which flows according to purely physical laws, cash flow is directed by human psychology. We collectively determine where money goes through our decisions, fears, and beliefs. I've seen stocks tank on good earnings because the market was expecting great earnings. I've watched terrible companies soar because of meme stock psychology. This human element makes the cash flow formula complex but still followable. Some key psychological variables I watch for. Narrative power. The stories we tell about companies drive investment. Tesla doesn't just sell cars. It sells a story about the future, and that narrative directs billions in cash flow. Fear and greed cycles. These emotions create predictable oscillations in market cash flows. When everyone is fearful, cash flows to safety. When greed dominates, it rushes toward risk. Attention economics. Where our collective attention goes, cash often follows. I've made good returns simply by watching what's capturing market attention before the cash flow fully follows. The best investors I know have mastered this psychological dimension. They don't just understand balance sheets, they understand how human psychology directs rivers of cash. Based on everything I've learned, I believe the formula for investment success looks something like this. Investment success equals cash flow position times timing times risk management divided by emotions. Let me break this down. Cash flow position, where you place your capital relative to sustainable cash flows. Are you invested in companies that generate strong, growing cash flows or just in stories and hopes? Timing, not day trading, but macro timing. Being able to tell when cash flow patterns are shifting. Are you buying when cash is starting to flow into a sector or after it's already flooded in? Risk management, how you protect yourself from unpredictable changes in cash flow patterns. Are you diversified across multiple cash flow streams? Emotions, the denominator that can reduce your returns. The more you let emotions drive decisions, the smaller your success. I've seen so many smart people fail in the market because they got one of these variables wrong. Great cash flow position, but terrible timing. Perfect timing, but no risk management. Or worst of all, letting emotions override everything else. Here's how I apply this mathematical approach to my own investing. I follow the cash flow, not just the crowd. Before buying any stock, I ask, where is the cash flowing in this business? Is it strengthening or weakening? What could change this flow? I want to own businesses positioned at the intersection of powerful, durable cash streams. I watch for system-wide cash flow shifts, interest rate changes, sector rotations, and major economic shifts all represent large-scale redirections of cash flow. I try to position ahead of these movements, not react after they've happened. I manage my own psychological response. I literally track my emotions in my trading journal. Now, when I'm feeling extreme fear or greed, I know my perception of cash flow patterns is probably distorted. I constantly revise my variables. Markets evolve, cash flow patterns shift. What worked last year might not work now. I treat my investment formula as a living equation that needs regular updating. The market rewards those who can accurately predict and position for future cash flows before others see them. That's not mysterious. It's mathematical. Once you start seeing the world through this cash flow lens, you can't unsee it. You'll notice how successful companies position themselves at critical junctures where money is already moving. You'll observe how they create systems to capture that flow and adapt as patterns change. You'll watch CNBC differently, seeing beyond the noise to the underlying cash flow implications. You'll read earnings reports with new eyes, focusing on what they tell you about future cash flow strength rather than just last quarter's EPS. Most importantly, you'll realize success in the market isn't about luck. It's about understanding the mathematics of our economic reality and strategically placing yourself within it. The formula is there, hidden in plain sight, written in the mathematics of our economy. Your job is to solve for the variables that will position you perfectly within that eternal flow. I'm still refining my own formula every day, but man, once you start seeing the world this way, everything about success, business, and investing just makes so much more sense. What do you think? Does viewing success as a mathematical formula related to cash flow resonate with you? Drop your thoughts in the comments below.